Hey guys, how are you? Yep, it was non-farm Friday today, and wait for it, it was disappointing. Yes, let's go to Forex Factory and just remind you what happened. So we did a non-farm payroll today with everybody, and in actual fact, we've been stalking the USD Turkish Lira. The Turkish Lira was one we've been stalking. So something you need to know about Turkey is they have per GDP one of the highest dollar based of the emergings debt. So if you have a certain scale of economy, yet as a percentage of that economy, you have a massive amount of dollar componentry, you are in trouble. In other words, the economic hitman, that is the henchmen that go out and ensure that third world or emerging nations are all captured with infrastructure projects, maybe managed by Halliburton and the like, all end up with big reams of dollar-based debt, gives dollar the eventual power. So when they crank up the dollar power and the dollar goes strong, you have to print more of your currency. It takes more of your money. You have to do more deflation. It's a greater degree of devaluation that is being inflicted on you. Remember, the Bolshevik strategy is all about getting you caught in a taxation rock on one side and a devaluation of currency rock on the other side. And that's how they squeeze you. And so as your currency devalues, you are being inflated. You have to earn more. You get dragged into higher marginal bands. You get squeezed harder on the tax. Supposedly you're earning more money, but now there's two of you working and you never have enough money for a holiday, where previously, a generation ago, one of you worked in quite a menial job and earned enough for the entire kids, family, stay-at-home wife, etc. So that's the game, and that's the Bolshevik strategy. And of course, the emerging markets get doubly hit with this. This is a setup that we were discussing inside our premium area. It was the Turkish lira. We were also watching it on a shorter time frame, and we can see via experience. So remember, I called the crash in the euro Swiss franc before the Greek crisis existed in 2009. That was part and parcel of where there was, to me, what I would call obvious interference with the market. These are official pegs or unofficial dark activity of central banks where there are no official pegs. So let me restate, there are no official ceilings, pegs or floors, but you can see the hand of a central bank. These are very interesting points for me. We were discussing this. I reported it to my guys when they were highlighting it. This is the USD Turkish Lira. That's on a half hour. You could see the structure. And guess what? They were attempting to defend. They don't want to be obvious. They don't defend at the 6. They want to defend before the 6. And I'm going to show you even on a bigger time frame. You can see actually you get, this is the key thing. People say, oh, your technical analysis system can't work. Governments can do whatever they like. They big players. Technical analysis doesn't work. Actually, technical analysis works brilliantly with insider players. This is an ascending HVF structure. You can see it. It was bleeding out the top, and it's typical of what goes down. And here you go. That is in essence. Oh, let's have a we must have our transgender pink. What a beautiful Friday it is. It's time for us to bring some color into this world. Here we go. So essentially you have, let's go back and draw a line, shall we? Essentially you have this lid that was in and around the 598 area, and you have the fact that it doesn't dip very much further at all. Go away. Go away, go away, go away. Sorry for that. So what in effect happens is you get this ascending HVF type structure to a traditional technical analyst unfamiliar with Hunt volatility funnel theory, who fails to recognize that it's not two competing trends, but it is a volatility based event where there is compression at either or both sides, top and bottom, or at a single point. In this case, it's mainly a lid rather than a floor. In fact, underneath all of that is the coming up of people that want to get out of lira and into dollar. And despite all of what happened today, we had a very poor dollar number, in fact, in terms of the data. So let's just see if we can load that up. Is Forex Factory talking to me? We go to the calendar and we check and see, and we saw this event in, and this is why we also do a live event around the data, because often market plans a move, and sometimes it doesn't care what the data is. It doesn't care what the data is. It just needs that data point out the way to make sure there's not a shock into the system. And that's kind of what happened today. In actual fact, while on the surface the number was a little bit higher than expectation, this number is a big hoax. It's got the birth-death model, which adds people in on the basis that, you know, people supposedly aren't easily in the grid and some might be out, and it just makes all sorts of assumptions. Basically, the average hourly earnings was down over there, and that is significant. That means more people doing pizza jobs, more jobs, and earning less. And then, of course, also the unemployment rate was up. So that is generally not a good number. That broadly was not a good event. But the number was higher, so that was supposedly a green element to it. Now in Canada, the number was better. In other words, the employment change was higher than expected, and the rate actually dropped. So that actually was a better set of data, and an American data was not good. By my take, as I say, almost the number has now become, it used to be the key driver. It's the least interesting metric. What is the rate of unemployment? You've got to also remember there's very large, massive, the most significant non-participation in this economy than there's ever been. In other words, a lot of people aren't being counted as being unemployed. In other words, they're just not participating. We won't count this whole segment. We're only talking about these people. If you've been looking for a job for more than 6 months, you're deemed inactive and not really trying. And therefore, you just are not included in the data stats. Anyway, that brings us back. Bad, essentially, USD number. So initially, we started to weaken into the non-farm number. You know, the pound weakened against the dollar before the release of the stats. The euro was releasing into it. Gold was softening. And then, boom, the number comes in. And I say the number, the percentage comes in disappointing, and the unemployment comes in disappointing. And initially, the dollar weakens against the euro, against everything else, and it dips down. And then the market largely shakes it off, and the dollar goes back to strength and actually starts pushing back. We can have a look at that against the pound and the euro, but I've got it on the Turkish Lira because this one was at a key level, and we knew it was at a key level. That's one of the reasons why we have key levels of significance in our program. It's one of the reasons we don't spend our time talking about the likes of moving averages all the time, as so many supposed top dog technical analysts are asphyxiated with lagging indicators instead of looking at the price and the levels. I'm going to take you up a time frame and show you how you could see that we'd kissed this level before. Yes, indeed, you can see it. So there was your flat top. It's quite clear that the 6 was psychological, and you always try to defend a number before the number is arrived. You can see there was defense there, and you can actually see that spike was getting unruly and was kept back when it threatened and the 6 and just stepped through it. There is a real desire not to have it go above the 6. And you know what? You can't hold back the tide. If you're a central bank, you lose that one in the long run. Ask the Bank of England after Mr. Soros decide to take them on with all his vultures. Yes, indeed. So that didn't work out well, having gone in too high against the Deutsche Mark, Thatcher's big error. But anyway, so this is a key level, and I'll highlight also how this was a key level even before. Let's get a little bit more data on and just show you, go right up to the full day, shall we? And take you to the daily chart. So there was an absolute mooning. We've been long since 2013, on and off. The only time we took a short is when we had an absolute blow off top, and he absolutely amped the rates. We were getting such a positive carry during this period over here. And there was a descending triangle stroke structure. I won't get into more detail about that. And we were being paid to hold that trade open quite phenomenally, and we were making money on the trade. But you can see that this level is your key level. And they don't want that to fall. I can do it with a straight line, why don't I? And you will see how prevalent it has been. And it is the key level of 6. And we've just poked a nose over it now. And when you had this point over, you normally break key levels of significance with momentum, hence why that was impulsive. And then it couldn't hold on, it fizzled, it came back, it broke it again with momentum, then it drifted up, and when it came down, it broke it with momentum to the downside, and then it resisted. It started resisting just before, and then we've had lots of touches bumping up against this. So what is coming? The buying is coming up under here. When I say buying, the getting out of lira for the fiat currency, that is the dollar, and even more so, the fiat currency is the yen. The best trade is actually JPY versus the Turkish lira, but it's a harder one to find, although certain brokers do offer it. Speaking of brokers, We put this on, I put this on as non-farm was going because we'd been watching it and I was afraid that it might dip down one more time first. So you could have been, if you bought at market, close to the 5.98s that we were looking at to get in, you could have been run down to the downside. Now, Turkish Lira can be a heavy contract. If you get in too big, you're going to get scorched. So I had limits at the lower end, and then as we were coming to the non-farm, it was clear we weren't going to get another dip, and it was clear that the dollar was going to get the strength. So alerts started ringing, and we were able to get at market sub 6. So these were the entries, and a sample of one of my entries that we took in there just as it was poking its nose over the parapet and was in clear break mode. So you can see that was actioned even after spread. There's still sub 599 fives, and then you got the pump, you got a strong pullback, and now we're in this phase. Probably another chance that it'll come down again. The volatility will calm. It could come all the way and sit on the ceiling, and that could be support now for a while. It could mean you give quite a bit back, but there could also be second pushes as well. So now that we've got away, we've got a nice tight stop just under our hammer there. It's a decent trade for now, and I think I'll hang on to it. There's scope for further upside. So you can see the entire thing. We're utilizing Scandinavian Capital Markets, guys. It's in the link is in the bottom there. Value of this, a proper, legit Swedish, European-based broker. In other words, no nonsense. This is not dodgy part of Cyprus, Middle East, Israel, and all of these places, and all the binary options, Gibraltar, hiding in offshore haven, etc. Legitimate, regulated, good, solid market, but outside of the EU margin restrictions. That means you can get 100x on your margin. You can get real margin. You can get real. Now that's dangerous. You hear me now? It's dangerous as well. There's a reason the EU does it, because too many of you are blowing yourself up. But if you know how to time a trade and you can get a tight stop and a good entry, instead of being capped in how much you trade, you can push it out a little bit. You can push it out. So not all your margin is being held just for a moderate sized position, as is typically the case with spread bettors, CFD companies, all in the UK, the Europe, and everywhere else, coming to Australia now, and others. So the link's down below. You can go and jump on, and they're a very good crowd, and I vouch for them, and I don't give my name away easily on that. So I utilize them personally. Anyway, enough of that. Turkish Lira was the game. Is it going to continue? Well, it's a decent little break, but it's still not epic. You know, when you look at the melt up here, I'm looking at this more in terms of this initial fractal that I've outlined for you here in the very roughest of senses for the purpose of this video, and you have already had a little bit of pushback. So this thing could fizzle and come all the way back down. You know, you're a hero for a day and it doesn't age well. That's okay. We're just talking about a concept and a principle. We know we manage loss. We can, if we like, we can get a lock in. Right now, we're in money, and it can be a zero trade for us for a stop loss. You can do a lot of things, but we'll wait and see how it transpires. Will there be a second tier? Is there news to come? Turkey's been involved. Turkey's getting involved in the Libya, Syria, wati, and everything else. Who knows how it pans out? So Erdogan likes to put himself about. There's a lot going on with Cyprus, the oil and gas in the Mediterranean as well, apart from Syria, Iran, and all of these things. They always seem to be a little bit in the mix. So it's going to be interesting times, and you could have geopolitical events suddenly make this a wise trade in hindsight. Or, as I say, it gets stamped on and there's no follow through. And this is just a probe, and the central bank wins for the day. But they're not going to be comfortable with that staying above 6 for too long. So I think it's either going to pull back into the range, into the comfort of sub 6, or it's going to need a press on. So we'll see. So I just wanted to give you that update. That's what you missed by not being with us in the non-farm. We took that particular trade live as it was happening, and the non-farm was the triggering event. Once they got the data out of the way, the dollar got stronger, illustrated by how it performed against, say, the euro, which is clearly the biggest pair. And if we have a quick look at that, you will see that it is just down, down, down she goes. We did call this rising wedge, by the way. After a while that we took it, we did mention and put it through the Twitter feed. If you're following on at the Market Sniper, you got a dip, you met the support at the blue line, you had your rally return move, and now you're spilling. What are you now? You're sub 1.1 on the euro. What a sick currency. Anyway, the dollar's is a bit strong as well, it has to be said. So I think you'll find the GBP is also down. We were also short. We're suggesting shorts will be beneficial. It was a tough one to get perfect entries on. You can see we've been doing a lot of work. There's a head and shoulders for you. There you go. You have it for free from me, the Market Sniper, and it is only just triggering in our view, and I will throw that in as a little piece of information for you. Hopefully, if you own your own outcomes and you make a little bit of income, you'll see what you miss and you come and join us in the Market Sniper. This is an ugly candle. It looked up and it spilt over. There you go. There's a possibility of a head and shoulders. You can see how we use our projecting in that manner, and that is down to the 123. So still potentially a good risk reward. That is dollar strength, guys. That is dollar strength. How's that going to turn out for our buddy on oil? So what the hell? I'm doing a couple of flybys. We can also take you past UK oil. Let's go US oil, which is WTI. It's not going to like strong dollar either, so I would imagine that is once again pulling over after a bit of a rally. So back down to 50.43 after going back up to 52. Remember, we are short oil. We think it is going to go down, down, down. And I think with this element of dollar strength out there, a few things could struggle a bit. You may even find Bitcoin is going to battle to make easy ground as well, but that's one for another day and a different discussion. Okay, guys, so the Turkish Lira, probably our favorite of the emergings, but go and knock yourself out looking at the rest of the emergings. Remember to do that. We talk about 360-degree analysis. I can't tell you the ones we are looking at on there, but you don't want to have too many dollar theme-based strength plays, because if they fizzle, then you get kicked in the arse in 5 different places. That's another thing that many people forget to remember when they're analyzing a market. Also, part of doing 360-degree analysis is, what if we take the dollar strength out of it? Well, the euro's been so weak that it's actually barely managed to make key ground at this time frame on the Turkish Lira. So it's almost helping the Turkish Lira. However, be warned that at a bigger time frame there is similar structure. So if events get disorderly, this is why I think this Turkish Lira may survive today and even strengthen today. It may even do what it's done on the euro, but it's not going to win the war. It may recover a little bit from the battle, which it's managing to do against the euro. The euro seems to be very, very weak. Okay, guys, that's your currency wrap, including an emerging break that's occurred on our non-farm that we took. And if you want to be part of our community, check out the links below. Watch the free mini-series if you haven't already. And if you just want access to a reliable, good C trader, you don't have to, you can use MT4. I like the C trader version of the Saxo Capital Markets. It's awesome, it's crisp, it's clean, it's more modern. MT4 feels a bit clunky and old school to me. And you'll get big leverage for when it's suitable. Be a sniper. Do not blow yourself up with a reliable European-based company. Okay, that's it from me. Enjoy your weekends. Bye for now.